Merry Christmas, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of December 27th through December 23rd or 31st, 2021. It appears that Santa Claus is coming to the stock markets this year, as he usually does, and the Grinch will not steal our Christmas this year. So let's put together our weekly trading game plan for this week, December 27th through the 31st of 2021. And let's get started. So first, let's talk about the Santa Claus rally. I know we've mentioned it for a couple weeks now already and tried to prepare for this Santa Claus rally, and it looks like this year it may have come a little bit early, which is great. And let's talk about, what can we expect and how long will this last and how do we ride this Santa Claus rally. So here's the article in Investopedia. I'll include this link in the description box below again. We've had it there for a couple weeks, so hopefully you've already read this article. It describes the Santa Claus rally describes a sustained increase in the stock market in the last week of December through the first two trading days in January. So this year that would be the 3rd and 4th of January 2022. Again, this year it appears that our Santa Claus rally is actually starting a little bit early, and we started this week, which is not technically the last trading week in December, which is our week coming up. So we should expect historically a good Santa Claus rally this week. So we'll try to prepare for that. You'll talk about, they talk about, why does this occur? There's numerous explanations, tax considerations. We expect that the tax loss selling has already occurred, and so we don't have that downward pressure anymore, and people are positioning for the new year, for the next year, and we'll talk a little bit possibly about the wash sale, what that means, and why that may affect us. So, and then the other thing is just the sentiment, the sentiment of the holidays. The markets tend to rally, optimistic. 2/3 of the Decembers dating back to the 1960s have resulted in a rally. So historically, the probability is very high that we get a Santa Claus rally. It's never guaranteed, but again, something we could have a black swan, or the pandemic stuff could Grinch our Santa Claus rally, but that's not to be expected. So we're going to expect and plan on a Santa Claus rally, and but we will be nimble and adaptive if things do turn Grinchy on us. So then after this, we'll talk about the January effect going forward. You can see it points to value stocks outperforming growth in December. So we'll look at that, and again, you can read this in more detail. The cause, optimism, is it real? Again, statistically, this has been historically shown that it's a real effect. And will it occur this year? Again, traditionally it's the last 5 trading days of the year and the first 2 trading sessions of the new year. So that would include this upcoming week and January 3rd, 4th, or the first week of January. So again, we're expecting a rally, we expect value, we expect tax loss selling to have abated. How do we position to take advantage of this rally? And that's what we're going to look at and talk about in this weekly trading game plan this week. Okay, let's very quickly talk about the wash sale rule so that you can position trade appropriately, and also this is why we probably saw most of the tax loss selling abating. I will put this article in Investopedia in the description box below. We can see what is the wash sale rule. Well, it's an IRS rule that prevents a taxpayer from taking a tax deduction if you, within 30 days before or after the sale, buy a substantially identical stock. that you sold to then deduct from taxes. And by substantially identical, you'll see in further details that it doesn't necessarily have to be the exact same stock. It could be an ETF or a mutual fund or something that holds that stock. So you have to be careful if you want to take a tax loss due to stock you purchase. It's at a loss. You want to deduct that from your taxes. You cannot buy that stock back or something that contains that stock within 30 days after your sale. So again, in terms of why do we see most of this tax loss selling abate, is because any fund manager that may want to buy the stock back because it has the potential to outperform next year needed to sell, give themselves 30 days, which is going to go into the middle of January, to be able to buy it back. So again, that's part of what I believe that causes this Santa rally, is everyone has done all their tax loss selling, it stops, and they have to wait 30 days to buy it back. Because what we'll see, we'll talk about this more next year, is your underperformers from this year have a tendency to outperform next year. So there's some desire to buy back those underperformers, but you have to wait 30 days. So again, I'll leave this article in the description box. You can read it in more detail, but here's some of the key takeaways. A wash sale occurs if you sell or trade a security at a loss within 30 days before or after you buy it back, or one that's similar, and essentially then you can't deduct it from your taxes. If you don't wait the 30 days, it's considered a wash sale. You cannot deduct it from your taxes. So that's the net of the wash sale. Again, I'll let you read that in more detail. I also am going to include another article from Interactive Brokers that I thought was very useful. I'll put the link to this one in the description box below as well. Again, you can read the details. They've got a good explanation, but the reason I wanted to include this one as well is it has a nice graphic that shows an example of, okay, if I bought this stock in January 1st, I sold it on April 1st, if I buy it back on the 10th, it's a wash sale. If I wait till July, it's not a wash sale. So again, I thought this was a useful example to show you how a wash sale would occur or not occur. And again, if you get stuck in a wash sale, you cannot deduct it from your taxes. If it's not a wash sale, then you can deduct it from your taxes as a tax loss for this year. So again, I'll leave both the links to this in the description box, and I hope that this all helps you understand both the wash sale rule and avoid it if you're trying to take a tax loss, and also understand why we expect most of the tax loss selling to have abated at this point. Okay, let's very quickly look at what Jim Cramer has to say in his weekly review from the CNBC Investing Club. Again, I'll put the link to the browser version of this email in the description box below, so you can view it in your browser if you're not receiving these emails. We can see, he says after a sluggish start, we got 3 strong sessions and a rebound. We can see from the title of his email, he says Micron, Biden, and Santa contribute to the comeback. So yeah, Santa Claus coming to town, coming to the stock markets. Then we can see, no lockdown, so that he's saying that contributed to it, and then the Santa Claus rally. We can see each sector closed higher. We'll look at the groups in Finviz in a minute. Industrials, 2% gain, and we can see tech rally towards the end of the week. Swing higher in tech. Micron, so semiconductors were making a run. We could see healthcare materials were in the middle, real estate utilities at the bottom. Then we could see, dollar, gold. Okay, so we're going to see in the futures that the gold's trying to break out. It's at 1810, trying to break out. Oil made a run. It's up above 73 again right now. And we saw that the Treasury yields ran up, prices ran down towards the end of the week. So in terms of economic data, We could see, gross domestic product (GDP) was better than expected, which is good. And again, we'll look at some of our commentary in a minute. We see durable goods orders was better than expected. Etc. Core personal consumer expenditures was a little bit better than expected. So generally positive, and then we can see coming up, we're pretty much out of earnings right now. We can see some of the events coming up, pretty standard, not real exciting. Jobless claims on Thursday. So if we look at some of my notes from those events this week, the only notable ones that I pointed out was on Thursday, the continuing jobless claims was a little bit worse than expected. So that says, again, the Great Resignation is on and people are not going back to work. I also noted that the oil rig count was slightly increased. So even though oil prices are running up a little bit, it looks like the oil rigs, they're just slowly, quietly bringing more online, which means more supply. Which should either slow the increase in oil prices and eventually peak and come down. So we'll see. Right now, oil's running up. Obviously, it is Friday the 24th. The markets are closed today in the observance of Christmas. So I'm starting this game plan a little early. So since the market's closed. So another thing to note is on next Friday, the 31st, the stock markets are open. So even though they were closed on Christmas Eve, they are going to be open on New Year's Eve next Friday for a full day. So please prepare accordingly. So now let's look at what happened last week, the futures, where we stand, and where we might find some opportunities. Okay, now I'm on the home page of Finviz. You can find our affiliate link to Finviz as always in the description box below. We can see each of the indices, although they kind of sold off at the very last minute, they all were up. We can see in the heat map most things were green except for maybe real estate. The one thing I wanted to point out here that's interesting, and we can dig into this more and find some opportunities, is although we can see there's more advancers, more new highs, there's still more stocks below their 52-week SMA than above. So that says, and again we're talking about the Santa Rally, and we could also see there's more below their 200, but there's also more below their 50-day SMA. So that says there's some opportunity. If we can find the value stocks that are below their SMA into the Santa Rally, it looks like there's some upside opportunity in these areas. Again, it's finding the value stocks that are going to rally in the Santa Rally and have some upside potential. So that looks very positive. That it looks like there's some good opportunity there. If we briefly look at the news, we see Asian stocks mixed. So I believe the Asian markets, we'll look at it briefly in Finviz, but I believe the Asian markets are still open. There's still China issues. Again, we're staying away from China. And then we can see, okay, at the futures, we can see oil kind of ran up and now it's flat. We'll talk about natural gas. When we get to the futures, we'll talk about how we're playing that right now, but we can see it kind of dipped, ran up, dipped, etc. We see gold is, again, trying to break out. It broke out at 1800, and now we can see it's trying to make a run, hopefully. And then we can see the Treasury, the 30-year got all the way up to 1.9, 10-year up to 1.49. So the yields ran up, prices ran down, and we'll see that again in the futures in a second. Okay, if we take a quick look at the Groups tab in Finviz, you can see there's the Groups tab. We can see on Thursday, the 23rd, pretty much everything was green except for real estate, industrials, cyclicals, materials were the leaders. We can see for the week, and again, this is kind of evidence that our Santa Claus rally is starting earlier. We can see most things are green for the week. We can see tech was the outperformer for the week, and again, consumer cyclicals and communication, which was beaten down for quite some time, rebounded, rallied. So then we can go back to the month, etc. So you can dig more detail, but again, this gives us good evidence that the Santa Claus rally is on. Tech is rebounding, and we can see industrial cyclicals and materials were the top performers on Thursday. So again, a very useful look in the Finviz Groups tab. So now let's look at the futures. Okay, now I'm on the futures tab in Finviz. We can see each of the indexes ran up towards the end of the week, kind of are peaking. We can see S&P, I don't think it quite ended at an all-time high, but it's trying to make a new all-time high. We can see the NASDAQ is recovering, headed up, and the Russell had a very nice bounce. We see all these indices are running up. We'll look at them in more detail, but because of this Santa rally, even though the S&P is near a top, I'm not interested in trying to short any of the indices during the Santa Claus rally. Once we get out of the Santa Claus rally in the first week of January, we'll reassess where we're at and see if we want to go long or short any of the indices. We can also see the VIX settle down. It had a little perkiness at one point, looked like it might spike, and then now it is pretty much retracing, settling down. One of the things, it probably won't happen this week because it's going to be a slow week with the holidays, but we're expecting the VIX to settle down, retrace, unless something happens, and we would look to go long the VIX. We see oil ran up a bit, got to 73, etc. Is again looking up. We'll see where that peaks out. Again, because of this run up, I'm not really looking for a play in oil. Natural gas, we can see natural gas has been kind of bottoming and then trying to run, and then it keeps coming back to this bottom. And we went long boil in this drop, and we expect at some point, it was quite cold in a number of places. Texas, Florida, it was colder than expected this week, this Thursday. I know it's cold up in Toronto and snowing. I know they were predicting a warmer than average December, but I think once we get a cold snap and some bad weather, I think we're going to see natural gas run up. Another thing that I didn't point out earlier, but was in the economic data, the inventory drawdown in natural gas that was reported, I believe, on Thursday was a little bit higher than expected. So they are drawing down inventory of natural gas. So we expect this run up. We would like to see this gap fill. We think there's a great opportunity, and again, we're long boil, and we're going to scalp it on these peaks, but we're really looking for this gap fill back up. So gold, we're long a number of gold miners, GLDI, etc. We're holding GLDI, looking for this. Hopefully, it will break out and head back up. Again, inflation, all the numbers say inflation's high. It's not changing anytime soon. So gold, silver, we can see some of the other metals really ran. I missed those opportunities when they bottomed and bounced. Copper, there's a lot of discussion that the copper input into EVs and EV charging stations, EV batteries, that copper is a major input. Again, if this dips back down, there might be some opportunity there. Then we could see the treasuries again. They bounced around a little bit, and now the price is headed down, yields headed back up, which is what we expected. We tried to catch the bottom in TTT when the price spiked, but it didn't quite get to where we wanted. So right now, I don't see a strong play in treasuries. It's kind of in the middle of its ranges. So I don't see a real good play. We can see the dollar declined a bit, which helped with commodity prices. So now we'll look at what data we can find in Webull that can contribute to our picking. Actually, let's look at the indices real quick. I'll do that right now. Let's look at the SPY. So again, we can see the SPY's trying to break, S&P's trying to break out. It hit this multiple top. It's trying to break out. Again, with the pressure of the Santa rally, I would expect a new all-time high. and then we'll see what happens from there. But I would expect the SPY to break out to a new all-time high due to the Santa Rally. But I'm not going to short it because of, again, the pressure for the Santa Rally. NASDAQ's a little below its high, but again, it's trying to break out of this downward channel. It's trying to recover. Again, I'm not interested in trying to short any of these indices during the Santa Rally. In early January, we'll take a new look. Again, Dow, same things, try to break out of that downward channel. These guys are all going to look the same. Russell had a very nice bounce. Again, I think the value stocks in the small caps have a lot of potential upside, and that would be something to look for. That's something we'll be looking for is, are they profitable? Do they have cash? Are they truly value stocks? We may see some, just hype type selling or hype type buying based on technicals, something that's way down, a small cap that's way down, people start running it up. Be careful with those, take profits when it peaks, because again, if they're not value, if they're not healthy companies, they're probably going to give up their gains pretty quickly. So, but in a Santa Rally, we may see some exuberance that would cause a pop in some of these stocks that would not be considered quality value stocks and would be at risk. So, and then we can see the VIX retracing, settling down a bit. So, unless we get an event now, we don't really expect a VIX spike anytime soon. So, I hope that all helps. And now let's see what other data we can find in Webull about the state of the markets. Okay, now I'm in the Markets tab of the online browser version of Webull, and I wanted to point out to you that it looks like Webull has extended their offer for 5 free stocks for a new account until the end of the year. So I believe originally this was supposed to end yesterday on the 23rd, but now until December 31st, you can get 5 free stocks with your copy of Webull, and you can get Google, Facebook, Starbucks, Snapchat, and others. And our affiliate link to Webull is included in the description box below. So if you're not already using Webull, we would highly recommend you get your copy of Webull now and get your 5 free stocks. Another thing that I've recently learned with Webull that was very exciting is you can now trade options in a retirement account. That includes IRAs, Roth IRAs, rollover IRAs, with Webull with the desktop version. So we are also starting to use the desktop version, and we will do some future videos on how to trade options in a retirement account using the desktop version in the future. But again, that's very exciting because most of our trading is done in retirement accounts. So you'll see again, I'm in the Markets tab. This is the browser version of Webull, which we've been using for a long time. We can see there's more advancers, quite a few more advancers than decliners, but the advancers is a small percentage. So we're still heavy small advancers. If we look at the net inflow, we can see the NASDAQ got the majority of the inflow on Thursday, and there was more outflow in the NYSE on Thursday. Again, if I flip over to the global tab very quickly, again, this is great for pre-market, the pre-4 a.m., 4 a.m., to see what are the global markets doing. We can see Europe is open today, even though the U.S. is closed. We can also see Asia was open in red. Europe is green right now. This is the 24th, Friday the 24th. Europe is currently green. If we quickly just look at some of the after hours, what was going on, top gainers, it looks like a mixture, transport, some energy, etc. If we look at the losers, some healthcare, biotech, etc. There's some big biotech news I know on Thursday, some major pops. XXII was a big winner, and that's a low nicotine tobacco product that got FDA clearance. So if we look at best performing industries and we hit the all, we're going to see mostly green. We see education was a little negative. That's a whole other theme we can talk about at some point. But again, mostly green. Uranium has been doing well. Again, it was a major reopening day on Thursday. We saw a couple days of reopening theme after a couple days of lockdown theme, pandemic fears, and then again we're still seesawing. It's just multiple days instead of maybe one day, but we're still seeing a seesaw. I still expect to see some of that. So maybe the Santa Rally will abate most of that, but we'll see. So then if we look at the ETFs, similarly, we go to all, we're going to see up, up. Russell is the top performer, so kind of as we expect, up. NASDAQ, so Russell, NASDAQ top. Dow still up, S&P up, but again, not as much, and I would expect, VIX down. So kind of pretty much we expect. We look at industries. Again, they're mostly going to be green. Utilities a little negative. Energy was a little negative. Industrials very green. Healthcare very green. Communications, again, that's a recovery. It was beaten down pretty severely, so I think people are seeing that as an underperformer and expecting it to outperform going forward. Technology was good. Basic materials, again, good. Uranium. Real estate was down. I kind of like that. There may be some opportunities. We like the REITs like O, which is Realty Income, LTC, which is a healthcare REIT. If those guys come down, we'll look for catching a bottom and swinging those back up. So downward pressure in real estate may not be a bad thing for us. And then broad basket, oil we can see is up, ag, gas, oil. Yeah, we expect oil to continue up until some event, maybe OPEC increasing supply or something else happening to cause a peak in decline in oil. And then again, bonds, we know bond prices are running down, yields are running up, so we're seeing high yield, etc. So got a lot of good input data. Again, Santa Rally, Santa's coming to town. We'll look at, given all this input, given the Santa Rally, given that we're looking for value, quality stocks that have upside potential going into the Santa Rally, let's go look and pick our stocks for next week. So we hope this all helps. Please let us know in the comments below what you think of this analysis and this part one. And give us a like, smash the like button. If you're not already subscribed, we hope you'll choose to subscribe and share this with your fellow traders, fellow BeachBum traders, friends, etc. And we will see you in part two, where we will talk about which stocks we're going to watch for next week based on this information going into the Santa Rally. So again, this is for the week of the 27th through the 31st, the beginning of our Santa Rally, and good luck and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel. And please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.